Hey everyone, welcome back. So today I'm going to be talking about how to make weekly income selling put options. Okay, so if you don't really know what selling put options mean, that's completely okay. I'm going to show you exactly how that works on my Robinhood account and how I can make pretty good passive income using this strategy. Okay, so real quick, just before I begin, I do want to let you know that this strategy does require quite a bit of collateral, depending on what kind of stock you're selling put options on. But that's why I highly recommend Interactive Brokers. Interactive Brokers has a unique margin account where it has basically the lowest rate out there, where you have a lot more buying power off of the cash positions or cash and positions that you have in your portfolio. So let's say, for example, if you're holding about $10,000 worth of cash, you have about $60,000 worth of long stock value, and you have like $20,000 worth of mutual funds, and maybe you have some securities as well. Okay, so let's put that all in. So you can actually borrow quite a bit of money from your positions, as you can see, and also really just depends on what you're trading. But if you have below $100,000, you can still borrow off of a really low rate of 1.59%. So check it out below in my link below. You should see a link for Interactive Brokers where you can get up to $1,000 in stock. And let me know what you think of Interactive Brokers. Okay, so without further ado, I'm going to take a look. I'm going to show you a couple of stocks that you can really trade options on, and specifically selling puts and where you can make weekly income. But what I always like to show is how I even identify when to get into a trade. Okay, so I use two tools a lot, basically just Yahoo Finance and Finviz. Okay, so I'm taking a look at Tesla stock today. The first one is Tesla, TSLA. I'm sure many of you have heard of Tesla, the EV company with Elon Musk. And so the first thing I always take a look at is under Yahoo Finance, you'll go to charts. You'll take a look at the Bollinger Bands. Bollinger Bands is just basically a system where it tells you the moving average and how likely it's going to go back to essentially the center line, right? So if it's trading below the center line, is usually a pretty good time to buy. If it's trading above, that's when you should be a little more careful because it may trade back to the moving average. Okay, so it's just simply an indicator. It could always change. So it's not a foolproof, way to know when to enter. But for the most part, as you can see, it moves kind of around the moving average. Okay, so right now it is slightly below this moving average. So I do think it's a great time to sell spreads for Tesla. It would have been a really good time last week to sell spreads because it was way under the moving average. And then taking a quick look at finviz.com, you can also see the RSI. So RSI is relative strength index. It just tells you if it's overbought or oversold. If it's over 50, it's overbought. If it's under 50, it's oversold. Okay, so oversold just means that more people are selling. Overbought means that more people are buying. So usually when it's oversold, is also a good way to know that it may be a good time to get into this trade. Okay, so going to our Robinhood account, we'll go to trade options, and I'm going to go ahead and just sell a put. Okay, I'm going to sell a put expiring, we'll say, in about a little over a week. Okay, so right now, Tesla is trading at $1,082. It's been up quite a bit the last couple of days. But right now, if it's trading at $1,080, that's kind of hard to say. You would first find a strike price that you'll be more than happy to own the stock at. Okay, so let's say I'll be more than happy to own the stock of Tesla at maybe, let's just say $950. Okay, so I think $950 is a steal, and therefore I'm going to sell a put for Tesla at $950. Okay, so selling a put just basically means that, okay, if it goes down to 950, I'm forced to buy 100 shares of Tesla at $950, but I get paid a premium of this amount. Okay, so in this case, it would be about $1,200. Okay, so now that's basically how you would sell a put weekly. Now I understand that you would have to put up quite a bit of collateral, so this may not be the best trade. And that's why a lot of times it's actually a great idea to open up monthly or even quarterly credit spreads. Okay, so let me show you how that works. And although you're not exactly collecting premium every week, you're gonna essentially get paid premium up front for 3 or however many months you're selling to put out for. So, for example, if you're selling Tesla again, let's open up this trade out until March 18th, 2022. And as you'll see, the premium is going to go up a lot more. Okay, so let's go in the money. So it just means underneath the share price. So right now, if you open up the same trade that we were at, 950, instead of $1,200, you get paid $7,000 to open up this trade. Okay, so right off the bat, you get paid $7,000. And the collateral you would need is still approximately the same. Okay, so but in other words, if you get assigned, great. Okay, so you would get 100 shares of Tesla and you would collect a premium. But if you don't get assigned, you would simply collect the premium. And in 3 months to collect $7,000, that's pretty good income for just selling a put. Okay, so now let's say you don't have $95,000, just stashed around, which I know a lot of people, including myself, is in the same boat. Let's take a look at another stock. Okay, so let's take a look at stock ticker HPQ. Okay, let's say I am bullish on HP, and I'm willing to own HP at a specific share price. So I can sell a put. Same thing, expiring, perhaps March, April, May. We're gonna do March 18th. And I would be more than happy to own HP at $35. Okay, so if I open up this trade, as you'll see, I will get paid immediately a premium of $139. Okay, the collateral I would need to have on hold would be about $3,400, and that's just in case I get assigned HPQ. And if I do, I would need to go ahead and buy 100 shares at $35. Okay, so you can really do this for quite a few different options. Let's take another look at another one that I really like, Cigna. So Cigna Group right now is trading at $225. If we do trade Cigna options, we can go ahead and sell a put out for 3 months. Okay, so 3 months out. Right now, I would be happy to own Cigna stock at 200, probably 210. Okay, so if I open up this trade, I would get paid almost $600, and with on a collateral of $20,000. So if you times that by however many option contracts you open, of course you're gonna get more premium. But really, it's just a good option to trade with if you're bullish on a stock, if you don't mind owning a stock, and you're gonna collect premium on stocks that you're happy to own. But if it goes down, you get assigned. If not, then you collect a premium. Okay, so take a look at different stocks and let me know what you think of this strategy of selling puts for passive income. If you know of any specific companies that you're selling puts on, or you think it would be a great idea to sell puts on, comment below and let us know what you think of different companies that you think would do well. Okay, so if you like this kind of content, if you want me to make more content like this, make sure you smash that like button, subscribe, comment below if you have any questions. Until next time, guys, I will see you around in the next video.